Welcome back to Media Week. Well, Seven Group, which is Seven West Media's largest shareholder, holding more than 33%, has posted a rise in first half net profit to $264 million. CEO Don Volte expects advertising markets will remain subdued with low to mid-single digit growth in television. He spoke to Helen Daly.
Well, we have a lot of competition in free to air. There's the fragmentation of the audiences, which we certainly are cognizant of, and we try to build our strategies to share in the opportunity set that provides. But you're correct. We're looking at low to mid-digit growth in television advertising at this point. We've been able to maintain a 40% share. We're proud. Obviously, Seven West Media is a public company. We're proud of their management and what they're doing. I was involved with that for a year, and well, I've been on the board for quite a while. But we're confident that we have the capability to understand the digital end of the business, the tablets, the mobiles, and where the audiences are trending forward. So we think that the opportunity set is there for us to continue to compete within Australia and maintain healthy profits for our shareholders.
Television advertising and audience numbers managed to offset declines in magazines and newspaper circulation and advertising. Are you going to stick with those businesses?
Well, our print business is under a lot of pressure, as you know, as everybody knows. I'll just say that the newspaper is kind of a unique newspaper. It's more of a local newspaper in Perth and Western Australia than the big metroplexes here in Sydney and in Melbourne. Might I just say that we understand what that issues that provides. We have a very high 57% home delivery rate. It's on a big base of print. We do understand that the audiences are migrating at the proper time that maximizes the opportunity of profits for our shareholders. We'll make some conversions along the way. The guys have that well in hand.
All right, let's bring in Evan Lucas from IG on that result now. Evan, good to have your company. What did you make of that Seven Group result?
Yeah, it's obviously a tale of two sides with the Seven Group result. Having a look at the other side of their business, which is obviously their machinery business, so the WestTrac result was a little bit softer than expected, but having a look at the whole broader idea, it was better than consensus. They reiterate the fact that they do believe they're going to contract between 30 and 40% over this year. But looking into the media part, they were okay. So the media contracted by about 4.5% year on year. Now, that wasn't too bad, considering that analysts had actually expected to be a little bit harder than that. They were expecting it down about 5 to 6%. So that was a good result. They know that Seven continues to maintain, premium market share in terms of where they're at, even though they saw seasonality sort of really helping something like Nine that had a very, very good summer season. So was reasonable numbers on the media side, but as expected, the other side of Seven Group, which is that WestTrac brand, also coats higher, was pretty weak, and that was expected. However, the share price itself hasn't overly reacted too badly to it because it was already factored in. You mentioned Nine there, Evan. Nine Entertainment also out with their first profit report since listing in December. What did you make of those numbers? Yeah, well, really, really good, solid numbers to come out today, Ingrid. And having a look at Nine now, since that low we saw just after their IPO, they're up around about 21%. They're up 15.5% if you bought them in at the IPO. And today's numbers do look quite tidy. So that was nice to see. They were ahead of the prospectus numbers, coming in for an income of around about $846 million. Net profit came in at 95, and that also beat the consensus estimates as well. So that was very solid. They are very well aware of the fact that the first half of the year will always tend to be quite good for them, particularly what we saw with the cricket. That really did help in terms of the revenue numbers they saw, and they do say that the second half of the year is on track, but certainly won't be anywhere near as strong as what we saw. But good numbers coming out of what we saw from Nine today. They are back touching all-time highs of $2.29. Was a good, solid result and should continue to see them do quite well compared to their prospective releasing. All right, Evan, thanks so much for that. Thanks, Ingrid. Evan Lucas there at IG. Let's now go back to James Manning from Mediaweek and get your views, James, on that Nine result, first result since listing.
Yeah, look, it was great. The way they set it up for people who went out to Nine, they set it up as a TV show, if you like. So it was in their main studio. Nice. They had somebody count them down, and it just went out live right on the button of 10 o'clock, and they had cameras filming it all. So it was a very slick production, as Evan said, a slick set of numbers. People would be very happy. Shareholders would be happy about what David Gingell had to say. He was very bullish on that 40% share share. They're not quite there yet. 7 has been there for a little while, but he thinks they can at least equal 7 and maybe, you know, creep a little bit ahead of them. He said, look, our big aim is to be back the market leader. He was also very bullish on people, on sort of criticising people who think 10 might be coming off a low this year in terms of ad share. He just says, look, he can't see the programming where they're going to improve. And I've been saying, look, I think 10 will do slightly a little bit better this year, but he's saying no. Look, as far as he can see, he just can't see any improvement there.
Well, it was really all the cricket and the block holding 9 up, though, wasn't it?
Yeah, but look, you know, they've still got the block, and they've got the Ashes again next year. So you know, it's not as if it's sort of a one-off that they'll never have again. So yeah, the block's ongoing. You've got The Voice. You know, Love Child has started the year fantastically well for them. They got away a new show, a new current affairs show midweek that did well for them this year. So they've got plenty of depth there. Things he said interestingly about the regional affiliation deals. He said, look, Win are going to have to pay more. I think the contract's got about another 20 months to run. If they don't pay more, they'll look for somebody else, and that somebody else would presumably be Southern Cross or Stereo. And he said the big overseas output deals are Warner Brothers. They pay them a lot of money. That's the only output deal they have left. If they can't get that deal for less in the future, well, they'll let that deal go too.
All right, let's talk about John Singleton, because he's weighed in on the Fairfax version of why Macquarie and Fairfax Radio, that merger failed. Here's a different story.
Yeah, he does. Look, Fairfax was saying, look, we got close to doing a deal for merging the two networks twice. Yep. The first time raising the cash was a problem. The second time getting the talent on board, Alan Jones and Ray Hadley at 2GB, they sort of scuppered the deal. Look, Singo's coming out and said, look, what a load of rubbish, you know. It's not the case at all. Jones and Hadley have both supported him there. And he's also had a real crack at Fairfax management, you know, saying the chairman, Roger Corbett, chief executive, Greg Highwood, are just basically no hopers. You know, he's just going to sit back and to quote him, he's going to watch the radio network be run into the ground and then maybe pick it up cheaply off the when it's sold off.
Right, a lot of war of words there. Arguments as well on how much money the Australian is losing. Yeah,
look, it came up on the ABC. There was a claim made that it was losing maybe as much as $50 million a year. There's been a lot of argy-bargy back and forth about that. And where we are at the moment, I think the editor-in-chief, Chris Mitchell, has come out and said, look, yeah, it is losing money. He hasn't really said how much, but he did say it's not 50 million, that's about 3.5 times what we are losing.
Okay.
So presumably that, you know, you do the math, that's about 13 or 14 million.
Right. OK, still losing money then. Yeah. Foxtel executives and stars also this week visiting Canberra to lobby politicians. What's all this about? Yeah,
look, Richard Freudenstein took some of his colleagues down there, the Astra chief executive Andrew Maiden, the new chairman Tony Shepherd, a lot of the stars, Patrick Delaney, the chief executive Fox Sports who was on the show last week. They were down there just to lobby their case. I mean, they're always wanting to get that anti-siphoning provision at least revised. They'd love to get rid of it completely. That's never going to happen, but first step, maybe get it revised. Yeah, so they got put on a show for a lot of politicians down there. Matt Shervington from Fox Sports, he hosted. So yeah, it was just a night out for the politicians. They gave them House of Cards DVD to take home.
Nice, nice. OK. Foxtel also making some other announcements this week about Presto launch and Foxtel Play discount. What are these? Yeah,
look, Presto is the way you can subscribe to the Foxtel movie channels online if you like. Pretty cheap too, $20 they're offering the movie package for, so you just need your computer. You don't have to take out a whole Foxtel subscription. Foxtel Play is the full Foxtel subscription online, if you like. So they're doing a new marketing push on that, and again offering some discounts to try and get you involved.
And some Disney channels coming out in time for Easter.
Yeah, look, 2 Disney channels coming up. Disney XD and Disney Movies. So animation is going to play a big role in both those offerings. That's a big part of the Disney core offering to its audiences. I think XD is going to target kids, or boys actually, about the demo is 6 to 14. So a lot of sort of cartoon animation, boys flavoured animation. And the movies package, again, the animated movies, a lot of the Pixar movies, like Toy Story and all that sort of stuff.
Just in time for school holidays.
Absolutely.
All right, let's take a quick break here on Media Week. Coming up, we'll take a look at the ratings and how 10 may fare after those Winter Olympics. That's next.